Priya, your 10-year, just south of 4%, a break of that level in the last couple of minutes. We're down 7 basis points, 398. You like it. You're a buyer. Why?
I think you have to position for what the Fed's going to engineer, which is a hard landing. The inflation is sticky. We were thinking that inflation is going to be sticky with a very hot labor market, and the data is confirming that the consumer is not slowing down. So we think the Fed, that's very data dependent, is going to continue to hike, and then stay restrictive until we see that slowdown in the economy. So I think owning tens is a way to position for that hard landing. I think duration risk is more attractive than credit risk, equity risk. So I think you're supposed to start to leg in, it's 4.9 or 4.09. The peak, I don't know. But I think getting in that 4% range, this is very attractive because the Fed's going to have to cut rates next year when inflation gets closer to 2% and the unemployment rate, starts to move higher towards 5%.
Now, Priya, would you phrase it the following way as well? Is that how you would characterize it? A short-lived reacceleration in the economy?
Yeah, I'm not even sure if it's a reacceleration. I think the economy is strong. There's a lot of momentum. I think the big macro question here is data strong because policy is not restrictive or the lags have not yet played out? And we're very much in the latter camp. It takes a long time. 12 to 18 months. Policy turned restrictive, I would argue, only late last year. The Fed funds rate crossed 4% in December. So, we've just started to price in this higher, tighter monetary policy. Real rates have been north of 1% only in the last couple of months. So I think it just takes a while. But I'm concerned that the Fed in this data-dependent mode is going to look at the data. And even though I would agree with Jim, I think there were seasonal issues. We had the COLA adjustment in Jan. Personal disposable income went up. It's not clear the data is going to be that weak, or the February data will be that weak. So does the Fed look at that and say we have to keep going? I do think they stay in these 25 basis point increments because we're nearing the end. Whether it's 5.25% or 6% or somewhere in that range, I think they go 25. But if they don't see a slowdown in growth and inflation, I think they could keep going well into July, potentially September, and make policy a lot more restrictive. I think the economy needs time, not more hikes. But I think we just don't know, which is why the Fed's going to keep going.